What's up, guys? I've been trading options for a long time. I had an amazing week this past week. I did right under 6 figures this week. I thought I broke 6 figures, and then I forgot to account for a losing trade, which was a hedge into one of my winning trades. So all in all, still a great week overall. By no means normal, so if you're like, oh, this guy makes 100K every week. I do not. Absolutely do not do that. But still a pretty good week, good year overall so far. Just shot a video talking about that trade and the setup, and I have quite a few videos just discussing my strategy for options. So I'm a futures trader who also trades options. You could say that I'm an options trader who also trades futures. What's key is that I look for confluence across both markets. I bias towards looking for futures trades with linear returns, and I really only look for a handful at most options trades per month. Okay, and I'm going to go through a top 10 list of key things. These are really psychological that have an outsized impact on my options performance, right? So we could start with number 1. There's only a handful of really good trades that you can see, right? You won't see everything. That's different than going on your chart or going on Wall Street Bets or Twitter and someone's like, oh, look at this contract that went up 300x. It doesn't matter if you couldn't see it, right? There's always some crazy contract, right? The setups that you can see, probably 1 or 2 a month at most. And that's assuming you've done a ton of research and have the data, right? So that's number 1. There's only ever a few that you'll see every single month. So even though that there's crazy returns every single day, there's only a few that you're going to see every single month. 2, you're often right. Like your analysis is spot on. Your timing is wrong. Okay, you're looking at Tesla. Tesla hits a major trend line. You're like, all right, I think Tesla's going to go, up from 240 up to 260 in the next 2 weeks. But then it goes sideways for a week, starts to make the run on the second week, and then it hits your price target on the third week. So you're off by a week. And if you had, bought contracts, a week out, you would have been up, 10x, but instead all of your calls went to 0. So that's number 2. You're often right, but your timing is wrong. Number 3, gamma pump works across all expiries, right? The gamma ramp, gamma trades, whatever you want to talk about it. People often describe this as a squeeze. There's nothing really, we'll not talk about squeeze mechanics, but what's important here is that you will see the asymmetric outsized return on zeros, 1 data contracts, 2 data contracts, 2 week data contracts, 1 month data contracts, 3 month data contracts. And I encourage you, the next time that you're in a trade and you're thinking of buying a zero, go a month out, right? And you're like, Forrest, that's a huge difference. It is. And you'll thank me later because you're still going to see those big returns, or you can go and use a charting tool to look at some of the changes in options premiums inside of a day, even though they're very far out. Remember, guys, all options have a relationship between their probability of being in the money. That's where delta comes in. But again, just try it for yourself. Don't take my word for it. Try it for yourself. Number 4, this might be controversial. Conservative strategies are a waste of time for day traders. If you're looking at the market every single day, okay, and I've been in Discord communities and look on Twitter and the internet, people who are talking about, oh, you can, set up this simple iron condor or something like this and just make, passive income where it's a safe bet. It's a waste of time, right? If you are trying to be a day trader and you're looking for edge every single day, you're going to put all of that time in really looking at the market every single day. If you're looking at time frames, anything under the daily, there's no point in doing conservative strategies, guys. What's the point? Why are you doing this, right? Just stick to binary strategies. Again, this might be controversial unless you are doing this as part of a very large portfolio strategy, right? Which I don't consider part of trading, right? So I have my long-term investment portfolio, which I literally don't manage at all. I just put money into it. And then I'm also a day trader. I know some people say, oh, well, you got to optimize. Like, no, different buckets for different things. My long-term portfolio, I don't care how it does. I'm just investing in hopefully the lights being on in America in 40 years. Okay, I don't care what it does. I'm not min-maxing it. Okay, conservative strategies over there. Income generation, different buckets of money. Trying to make as much money as I can, as fast as I can. Some of those profits go into reinvesting in the business to make more money as fast as I can. And then a lot of the profits go into long-term. All right, I already made the money. I don't want to think about it anymore. It's going into that bucket. Okay, conservative strategies are a waste of time for day traders. Number 5. This is another fun one for you new options traders, and I want you to really think about this, okay? Only idiots and people with the conviction that an idiot would have can hold to 100x returns. So what do I mean by that? You see these trades all the time of people like, hey, yeah, I made a gajillion% on this. You have to imagine you're in a trade, right? Let's say you have a net worth of 50 grand. You put 5 grand, you put 10% of your net worth into a trade, which is obnoxious, by the way. Don't do that. But let's say you do that because a lot of you will. 10% of your net worth is in a trade. You're up 10x. So your 5 grand goes to 50 grand. You've doubled your net worth. You're telling me you're not going to sell at that point? Okay. You would need idiotic conviction. Okay. And the point there is that the only way that you can get that conviction is if you have proprietary data. It does not matter what I say. It doesn't matter what any other YouTuber says. You need to journal. You need to have stats. You need to have analysis. You need to have things in your own words that will convince you to hold to your price target. I'm telling you from experience, it's extremely hard. Had a lot of trades where it got out. I just had a trade that went to 2,000%, which was, I was sweating, guys. It was tough. Right. But I've been journaling for months now. It's something I've been talking about with people in my community of my strategy for the year of increasing, pulling more out of the market on these end of day gamma trades that I take. Right. And I'm starting to execute on that. But I literally planned to analyze the market for months. I planned to do this for months because I know that there is EV there. I built a whole tool to be able to make it easier to do the research. Okay. Expect to put in the time to pull out the profits. You're not going to be able to hold to insane gains unless you have just disgusting levels of conviction to the point where everybody thinks you're insane, because you literally are. Right? Number 6, prolonged bias will cost you money. There are people who are perma bears, right? There are people who after the huge drop were like, oh, here goes. Here it begins the sell-off. And then what happened the next day? Immediate retracement. We actually engulfed it on ES and XP. This is just flat out dumb, guys. There's no reason to have a consistent, ongoing, forever bias or thesis. I have macro thesis, right? But I am willing to abandon any trade idea at any point in time. And this is really, really important. And that's because I care about making money. It's not about, making sure that some statement that I said on the internet, I can validate it at some point. I really don't care if every single person, I want you guys to know that I'm a legit trader, but I don't really care what you think, right? I only care about my P&L. I care about the money going into my bank, okay? So say you write up a whole thing, right? And this is important too, because very often, if you think we're having a 100-point up day and you're wrong, it's probably a 100-point down day. So there's just some component of your analysis that's wrong, which is why you should look to flip your bias quickly, right? If you have a flag set up, measured move, it's probably going to go the opposite way with the same amount of energy, okay? Or you're going to be a day late, something like that. So you have to always open yourself up to other probabilities. And again, that comes from time and experience, but don't just have a bias forever. Number 7, ignore Twitter. I barely get on the Twitter. I started posting and I stopped posting. It is like every time I get on Twitter, I contemplate just ending it all. It is not a place you want to be, guys. Long form content, if you really want to find, and obviously I'm a YouTuber, so I'm biased, but long form content, guys, digestible nuggets, things that are dopamine hits are not going to help you improve. Okay. Learning how to trade should feel like reading a book. Okay. You should be like ready, brain on, dig in. You should be testing and validating every single thing that's coming into your brain, scrutinizing it heavily, right? Adding it to your data bank to use for later. Number 8, inverse Twitter. So if you are on Twitter, we have somebody in our community, not just Twitter, he does a lot of Wall Street bets analysis, but sentiment analysis in general does work, so long as you're doing it on the macro and tying it into your own proprietary analysis, right? So it'd be stupid to just go on and be like, hey, these people are bullish, so I'm bearish. That won't work because timing is important. You still want to combine that with the charts, but if you combine sentiment analysis with your own analysis, it is very, very powerful. And yeah, we have the returns to prove it. Number 9, my position size was often backwards according to my confidence. So has this ever happened to you, right? Maybe you had a bad day. So the next day you're like, I'm going to scale way down, but there's a trade that you're very sure in, you're certain about. And because you had a loss yesterday, you scale down today and then you get a 10x trade, but it's on like, $1, so you get $10 out. It's terrible. Obviously I'm exaggerating. Maybe you put $100 in, so you get 1,000 instead of putting 1,000 in and getting 10,000 out, right? So your position management, your overall risk plan needs to make sense for your total portfolio to where you can eat losses without having to adjust your risk. Okay, I'm gonna say that again. You should be able to eat losses without adjusting your risk. So if my average trade size is $1,000, I should be able to lose 1,000. Trade hits, I make 10,000, right? That's how it should work. But if I lose 1,000, then I immediately go down on my risk 10x to $100 because I'm afraid, well, that's not going to work because I was willing to put in a lot, lose a lot. And then when the trade works out, I'm not putting enough in to make it worth the while. So really think about that. That ultimately might mean that my average trade size instead of 1,000 needs to be 100, right? So I lose 100, then I make 1,000 using the same leverage mechanics. But the point remains, okay? You should not be adjusting your risk size based off of outcomes, right? Your risk size should really be based off of your confidence as well as your overall portfolio value. And only you know the answer to that, okay? Number 10, the option chain will often signal where we're headed, okay? So if you look at the option chain, and I post this in our Discord all the time, like every day, I'll look ahead on SPX. So I'll look at zeros, I'll look at 1 dated, and I'll look at 2 dated, and I'll see where there's a ton of interest. Open interest will show you open positions at a strike. So on days where you look at up and down the chain and there's no interest, 20,000 open interest, something is interesting there. So I will look to maybe take a position there if it fits with what I think is going to happen in the futures market. And this is number 11. I know I said 10 in the title, but we're going to give you the bonus points. Futures Analysis TA will give you setups for options. This is really where my edge is as a trader. This isn't a secret. I think the executing it is super hard, so I'm not afraid to talk about this at all. But I do extreme levels of technical analysis on a daily basis of the futures market, right? ES and NQ, the indexes, as well as some of their confluence tickers, some of the underlying as well, right? So the primary contributors to NQ, like it's more tech heavy, banks, all of that. Look at all of these things. And then I will also look at SPX if there's gaps, right, in SPX. And I will look at the point of controls on ES versus SPX. And I will look for confluence with the open interest with, say, there's a prior day POC on ES, there's open interest that would confluence with that move, combine all that together, get a gamma trade, okay? So there's some complexity there, but again, that's where the number of at-bats where I started with this is low. For me to get all of that confluence means that a lot of things have to align, and very often they won't, and that's fine, okay? I'm fine with not taking trades because what I don't want to do is put money in, it loses. Put money in, it loses, right? And then I finally hit when, I took 50 at-bats and one hits when I could have just taken like 5 and one hits, right? Way better returns. So the returns that I get, like that trade that I had yesterday, honestly only matters because I'm not taking these options trades all the time. I'm really not. And it's so critical. I've gotten to the point with my trading where if I miss trades and things like that, if I didn't see them or whatever, like I honestly just do not even care. Like I don't care at all. The only time I get FOMO is when I see a trade that I could have executed on and I didn't. But if somebody else sees the trade, if I didn't hear about it, if I didn't have time to look at a chart, if they tell me about it, they got in and I missed it. Like I literally just don't care because it wasn't a trade idea for me. It was not my trade idea. It wasn't a trade idea that I took on and did my homework with, right? So that's the point that I'm at. And you guys should be the same. I want you all to get to the point where you can see people who are winning. You should feel good for them, by the way. Trading is not a competition. It is much more. So I was a runner, right? I trained with my teammates. I competed against them and with them. Not really against them, right? We're all in the market together, but you're not like taking the opposite trade of your friends, probably. It's very unlikely. But the point is, it's not competitive, right? Not directly. So you should celebrate the people who are around you. If somebody wins, you should not be mad about it. Hype them up. That's dope. I love to see people win, especially when we're all putting so much hard work into it. And it should come back, right? It should come back. But you really, really need to focus. The flip side of that is if there's a trade that you see and you're not executing, you need to be extremely critical of that trade. What stopped you from executing what you saw, right? Journal that, add it, to your playbook, the play, and make sure you execute it on the next one. These things, while simple, are key, right? So I highly encourage you to look. I'll put the list down in the description as well. And ask yourself these questions. Are you doing these things when you take options trades, right? Are you buying enough time in your trade? Are you taking options trades every single day? Are you following things that you see on Twitter, right? Or do you find yourself with prolonged bias that you just can't get away of and you're shorting every single day, waiting for the big market rotation? Short, puts. That's putting your portfolio at zero. I just went crazy with that one. But the point is, be smart. Ask yourself, would an idiot do this? Because if the answer is yes, you probably don't want to do what you're about to do. My name is Forrest. I invest in stuff. See you in the next video. Peace.